It's been a very interesting start to the new year 2021 because if you look at all the global asset classes, most of them have shown positive signs. Starting off with Bitcoin, that has been the top gainer across the board and by far the largest margin of gain that we have seen for the price of Bitcoin as well. It has surged more than 30% for this year itself, followed by WTI crude oil prices, which are up about nearly 20% for the year. Remember that today morning we did highlight the fact that WTI had crossed above its 1-year high as well. Also to note that during the year there was a point in time where WTI crude oil prices had slipped into negative territory. So comparing from negative zone to positive zone, that itself shows the stellar recovery that we've seen in some of these commodities as well. Talking about the equity space, the Hang Seng has surged the maximum amongst the global major equity indices that we track, nearly 9% gain for that one, followed by the Nasdaq, which has surged about 7.5%. The Nikkei 225 not too far behind with a 7% gain, and back home the Nifty 50 index has also surged nearly 7% since the start of this year. So it's been good going for equities as well as the commodities that we track. You have iron ore prices which have surged about 4%. Silver futures have gone up about 2% since the start of the year. Copper too has shown positive signs. So has the Dow Jones as well as the dollar index, along with the Shanghai Composite, which have surged anywhere between 1 to 2%. Now, amidst all of this, there's one particular commodity that I want to highlight, which has been in the negative zone, and that is the safe haven gold that I'm referring to, which is down about 4.5% since the start of this year. Also, if you deep dive into the charts of gold, it is quite evident that it has fallen from its recent high that it had hit in August 2020 of nearly $2,100 for an ounce to about $1,850, $1,900 that we are trading in that range currently. So it's more than 10% fall that we have seen since the August high that I'm referring to. The other interesting bit is the fact that there is a death cross formation which is at the annual for the gold prices. What does a death cross mean is when the longer term moving average is above the shorter term moving average, or just to put in numbers in place, the 50-day moving average will cross below the 200-day moving average. That is when you will have a death cross formation. Remember that in the last couple of years there has been not a single instance when this particular phenomenon has happened, and we are just at the cusp of creating a death cross for the gold prices, which is a bearish sign as per technical analysts, and the trend that we have seen for gold prices on the downside could actually get accelerated, and we could have further downside for the gold prices. Now, one of the reasons why gold prices have been falling is, of course, that the yellow metal is losing its appeal as a safe haven, because there has been phenomenal progress that we have seen across the world on the vaccine front, and the vaccination drive across countries we have been extremely successful, and it has created a lot of pain for the gold investors, because the safe haven is no longer looked upon as a haven, because there has been progress in the vaccine development that we've had and the successful implementation that has started. Of course, there is a long way to go, but for now looks like gold prices could be headed lower going forward.